Before the break, we were talking about what accounts to prioritize when you have a baby or a child, and kind of there's all these different options out there. So which ones to prioritize, how much to kind of put into each of those, and what a long-term strategy could be. So if you missed the first half of the show, feel free to go over to our website and subscribe to our podcast so you can listen in on those fun topics there. We're going to dive into very popular topics here in the office, the misunderstood tax rules. And not just misunderstood, these are the kind of tax myths that cost people real dollars or lead them into pretty bad financial decisions.
Exactly. And we're breaking down the top 10 misunderstood federal income tax rules. And trust me, some of these are things we hear from clients all the time.
Yeah, and hopefully by the end of this episode, you'll not only understand them, but you'll know how to avoid them and potentially cost yourself some savings and some mistakes in the future. So let's start with the first one. So the first myth is the confusion over tax brackets. So this is a very classic, if I move into a higher tax bracket, all my income is going to be taxed at that higher rate.
And no, that is probably one of the single business misunderstood tax planning guidelines.
Yeah, because I know we've talked about this on the program before, but the United States has a progressive tax system. So they're graduated rates, which means that your income is taxed in different layers. So we've got the first layer, which is roughly 10% on your income up to $12,400. And then it goes up to around $50,000 is taxed at 12%. And then the next 50,000 or so is taxed at 22%. So it's a graduated rate. It's not like if you make $100,000, you're instantly going to be taxed the full 24% on all of that. So it really is kind of that graduated rate.
So only the income that falls into the higher tax bracket is taxed at the higher rate. Not everything you earn is taxed at that top rate. So let's give you an example. Jordan is single and he earns $110,000 in the year. And he says, I'm taxed at the 24 tax bracket, so all my income is taxed at the 24%. And that's just not true. Jordan pays 10% on the first layer, as Kristin was sort of describing the brackets early, 12% on the next, 22% on the next portion, and then only 24% on that very top layer, which for Jordan's example is only about $7,000, a little less than $7,000 that he is actually paying in the 24% tax bracket. So don't fear the higher tax brackets. You want to focus on marginal versus effective tax rates.
Mm-hmm. Yep. And then, more money generally means even if your tax bracket goes up, it's still dollars in your pocket.